Hello, hello, hello. How are we all doing? Hope you all done. You've all had a good trading week so far. Obviously, it is Wednesday, and well, let's discuss what's kind of happened recently in terms of what's happened over the weekend. So, unless you've been living under a rock, obviously you may have seen that it's all kicked off in Iran, and obviously around that area of Israel and Iran and the surrounding regions. So for us as traders, right, what we have to be thinking about, let me just mute this over here. I don't know why it's blaring out my speakers. There we go. Perfect. Anyway, where was I? Where's my train of thought? Yeah, sorry. So obviously when we're thinking about these events, right, there's some things you should always be thinking about. Meaning, when you see stuff like the wars kick off, or in this example over the weekend, or what happened with Ukraine and Russia, you always be thinking about who is positively impacted by this and who is negatively impacted by this. Because obviously it's not so much directly benefiting off the war, it's about what commodities move based on the region or what is potentially going to be affected. So obviously, because we're in like the situation of where Iran is, you have the Strait of Hormuz, which accounts for about 20% of oil exports, or that channel. So obviously, if there is any stress around that region, then we obviously know that oil prices are going to spike, right? If we see issues around gas, there's a lot of stress around gas at the moment. Well, countries that import a lot of gas, like Europe, is going to become under pressure, isn't it? So the euro might come in lower. So it's not so much about trying to assess like who is actually going to physically benefit. It's about the sort of subsection of what commodities is going to benefit in this environment. The most surprising one for me, though, as I'm sure we can all agree, has been gold. Now, I did have a little look into it yesterday as to why that occurred. And, well, logically it makes sense. And I'll discuss it. We'll talk about it a bit later on. Logically it makes sense. But, like, if it occurred, right now, I wouldn't have thought about it like that. But we'll discuss it when we move on to it. But I do feel like gold can probably still go higher, though. Now, let's have a little look then at what we got in terms of data this week. I'm good, thank you. I'm good. So let's have a little look at the calendar. Let me quickly share my screen. There we go, perfect. So let's have a little look at the calendar. Is the data really going to be that impactful, though? That's the question. I very much doubt it. Why? Because this Iran situation is literally blaring in our faces. So we have to focus on that for the time being. The data will take a little bit of a back seat. And then when it starts to sort of die down, or the war starts to de-escalate, we start to see some sort of hopeful resolutions, the markets will turn their attention back to the data. Now, in that scenario, if we do see any sort of resolutions, the dollar will come in massively lower. Why? Because the whole reason it's propped up in the first place is because of the war, right? So if you remove that sort of reason it's so strong, then it seems overextended, too elevated relative to fundamentals. So that's what we have to be thinking about for now, is just purely focus on the war. When it starts to see some de-escalation, then we can look at the data. But until then, just focus on the war. But anyway, I just want to double check. I mean, if there's anything, we had ADP today at 1:15. GMT. It was okay. 63k is around the average though, so it's all right. It's okay. Services PMIs. Now, when you look at PMI data is known as Purchasing Managers Index. So basically, what it is it's like a survey that's sent out to purchasing managers or managers that purchase goods on behalf of the company, that they basically get asked like, how are your inventories? How is employment for you right now? How are prices doing? And what they do is they answer back, and then that accumulates the PMI that you see. And then from there, they basically think, or like the data comes out and the market's saying, does this suggest better growth, better inflation, more employment, less supply chain issues in the future? And therefore they take trades based on that assumption. That's why it's known as a forward-looking indicator, because that's what it suggests. So when you look at PMIs, you have to be looking at certain sections that the central bank stresses. For example, we know right now that the Fed is very much focused on employment, right? Inflation is obviously important. It has taken slight backseat because people are a bit more concerned about employment right now, right? We're seeing a lot more volatility around NFPs, employment data rather than inflationary. Why? Because the central bank has stressed to watch this. Therefore, the markets watch it. So that's why when you look at ISMs, you basically just click on the link. So on Forex Factory, you just click the little latest release. It'll bring you to the ISM website. And then we're obviously looking at the services. So we click view report. You then scroll down. It looks confusing, but trust me, it's not. And then you have a look at the sections that the central bank stressed the most. That's it. It doesn't, you don't need to be a rocket scientist. You just have to focus on what the markets actually care about. How would you know what they care about? By looking at what the central bank says. That's it. That's as easy as I can make it out to be, based on how I like to look at this stuff. So obviously employment, we can see anything above 50, by the way, means expansion. So for that month of February, we saw an expansion in the employment sector, or in the services sector, sorry. So that came in at 51.8 from 50.3, and we're looking here. In addition, you would generally look at prices. Prices did come ever so slightly lower for February. However, we are at 63 still, and that is quite strong. And that's why it's like, it is slightly important because it's inflation, but it's not the main focal point for markets. It is about employment. That's basically how you interpret PMIs. Like, that's all you have to do, and that's it. And then you think, okay, employment's good. ADP is being good. Let me double check. Unemployment claims, that's a weekly set of data. It's not too of volatility. What else have we got here? And then obviously we come into NFP. So generally what you would do is get a rough gauge of what this data suggests. And then NFP comes out and you can think, okay, maybe NFP is going to be slightly better than what was forecasted based on X, Y, and Z. But remember, it is a rough, very rough gauge. It is not set in stone. This is how it is. It's a very rough gauge. So I don't take trades based on that assumption, as you know. But yeah, that's basically how you do it. And then when NFP comes out, you generally would look at the revisions as well. So the revisions are when they have all of the data, and then this dark blue line here would be where it was revised from. So basically, July 2025, NFP came in at 147k-ish. It was forecasted to be about 100 and let's say 109, 110k. But what happened is the month after they said, okay, we got all of the data now. This is the actual print, and you can come and see that it's at +3. So that's why revisions are also just as important as the actual print itself. How do current geopolitical tensions affect markets? Kind of spoke about it earlier at the start, but basically you would think who is positively impacted and who is negatively impacted. So for example, if we look at Iran and I look at the map, so a little bit of a thingy right now. We look at the map, right? So here we are in terms of where we're at. So you can see Iran is here. You obviously got Israel up down here. You've got obviously Saudi, the UAE, and Oman, and Muscat. Muscat's obviously in Oman. So Kuwait over here. So here is what's known as the Strait of Hormuz. And you can see basically, I don't know if I can find it, but there was a really good map on Bloomberg that showed you all of the gas and all of the oil refineries. And basically what I was seeing was a lot of the refineries were around the edges here, you know, around Qatar, over here as well, obviously coming up to Kuwait. But obviously, how do they get out of this region? So all of the refineries are here. They then transport it by shipping and as well as gas. That's when you see those huge dome-like gas transporters. Those are what's the gas ones that you see. But how do they get out of that region? They have to go through the Strait of Hormuz, which is right here. So they come through here, down through here, and then go up towards here through the what is that? I've got a bit of a mind blank now. Suez Canal. Come out through the Suez Canal and then out into the Mediterranean, through Gibraltar Strait, and then out into the Atlantic. Or what they do is they obviously come through here, they go for Oman, and then they go out towards sort of Asia, Australia and down towards South Africa. So that's basically what they do. So you can see how important that this strip is in here. There's a lot of gas and a lot of oil refineries. So that's why whenever you are looking at the region of where the war is, you have to think about what commodity is affected. So that's why if we look at WTI or just oil in general, you can see oil has been spiking. Why? Because there is some potential for a escalation, some potential for the Strait of Hormuz to get affected. That's why oil prices spike in that environment. So as a result of that, and we know gas as well will spike with it. If we look at natural gas, nat gas spot, it did spike throughout sort of the start of the week. We are pulling back a little bit now. We did see a little bit of glimmer of hope from Iran. And that's why, you know, if you look at the DXY, we have started to top out a little bit. I don't think we are going to massively sell off just yet for the dollar. Why? Because it's still very early days yet to suggest that. So where was I? If we look at oil, and then we think about who is positively and who is negatively impacted. So, for example, who would you say in the chat who is going to positively be impacted by spiking in oil? Who would be benefiting in this environment? Basically, just think who exports a lot of oil. So we obviously know Saudi, but obviously you can't trade those currencies because it's what's known as a pegged currency, right? So you can't trade that. So you have to think elsewhere. I'm new to fundamentals. Can you tell me which is important? I can give you a rough gauge. Commodities is a bit difficult to trade right now, only because the only way to trade commodities as of what the situation we're in is because you have to literally just keep up to date with the live news. That's it. It's not like when you have like PMI data and NFP, you can have a rough gauge of an assumption based on what the data would tell us for the future, and then you take trades based on that idea. It's for this scenario that we're in, you literally just have to keep up to date with the live news. So if you see like a news come through right now, you then have to think about how is this going to impact the market. Whereas other stuff out there, you can take a little bit of time. So it's a little bit more difficult to trade commodities. I would definitely agree with that right now. What should we be looking out for next? As far as I heard, Iran still, yes. So right now, as long as there's still escalation or still issues, the dollar should remain stronger. WTI should remain stronger, or oil. And the yen and the euro will remain weaker. Australia will do very well. Why? Because they export the most gas. They export a lot of gas. So they're going to benefit on higher tensions around gas prices. So that's why if you look at like Euro AUD, GA, these sort of trades, AUD, for example, AUD JPY, AUD New Zealand, AUD CAD is consolidated, as you may have seen. Why? Because both currencies are doing pretty well. So if we look at AUD CAD, you can see basically move nowhere. Whereas stuff like AN and AJ has moved quite a lot. Why? Because of the scenario we're in. Euro AUD, downside. Why? Because Europe is a big importer. Australia is a big importer for gas. Australia is a big exporter for gas. So that's the sort of trade you want to be taking. Russia, Canada, correct. Yeah. Norway, yes, definitely. Venezuela, they did, yes. Why is dollar yen selling off? Because of what we've seen, some glimmer of hope from Iran. Meaning they started to potentially show some sort of interest of slowing down of the attack. That's basically it. But it's very early days yet. So if I show you dollar yen, still very, very, very early days. I wouldn't jump into that sell though. But yeah, you're all correct. Russia, Norway, so if you trade that in the NOK, which is the Norwegian krone, you definitely would look at that. Canadian dollar, of course, is another really good one in this environment. So now that we know who's big exporters, big importers are stuff like Europe, stuff like Japan. So that's why in this scenario, we've not seen the yen strengthen. Even though it's technically risk off and it should do very well in that environment, it's about the context of the environment. Meaning, the context is, yes, there's a war kicking off, but oil prices have spiked aggressively. So therefore, big importing current countries like Japan and Europe shouldn't really do too well. Why? Because inflation may spike and drag growth lower. So therefore, the currency is coming weaker. And that's basically how the rough assumption of what happens is. So that's why the yen hasn't really strengthened in this environment, even though it should technically. It's about the context. Now, does anybody know why gold didn't do too well? Like, why is gold sold off? There's a couple of things you could argue, but what are the main sort of reasons why people would say that gold hasn't done too well? So think about two things, which is positioning, and think about the what's happening in the US, or what this means for something in particular. People bought oil instead, possibly. Yeah, definitely. That could be a big assumption. You got to think about how much money is out there, though. Profit taken. Yes, so that's a bit of positioning. Another one would be because it can't be blocked, because it is blocked in Dubai and the physical one cannot be transported. Maybe. At this particular second, is there any war easing update to lessen up the safe haven demand? I did see something slightly this morning. Whether or not that's really driven it, I don't think it will be a huge thing. But I did see something about on Bloomberg, pushes back on report. Okay, so that was the one that I was talking about from this morning. So Iran pushes back on that idea then. So they denied the report. Okay, that was the one I was talking about this morning that I saw about Iran trying to start some sort of de-escalation. But that's why we saw the dollar sell-off. But yeah, where was I? If euros increases inflation rate hike interest, why is the euro becoming weak? Because of what it means for the economy. It's not necessarily about, yes, they would push back rate cuts, but this is happening everywhere. So it's like the US's rate cuts have been pushed back. Australia's have been pushed back. Japan's have been pushed back. Europe has been pushed back. So it's not like it's only happening in Europe. It's also about what higher oil prices mean for growth in general as well. So huge importers are going to feel the stress the most, aren't they? So therefore, you're going to see stuff like GDP come down because GDP contributes as the trade balance to, or the oil contributes to trade balance, which then contributes to GDP. So it's about like what oil prices mean for the economy in general. Do you think it will calm down? I don't really know, to be honest with you. It's really, really difficult to say. Good day from ISM. Yes, pretty decent. Mark, do you take profit based on fundamentals? I'll do a bit of both. So, for example, what I would do is, I don't know, let's say I was buying dollar yen. I know somebody that was buying dollar yen from down here, which is a really, really good trade from them. But basically, what you would do, there's two ways you can do it. I think I've spoken about this before. You either take out the highs. So, for example, if you're looking to if you bought here or down here somewhere, you basically look to your left and look at where we saw lower highs, right? So we got a lower high here, created a lower low, then saw a wick there, created another low. And very basic technicals. And this is another high here. So what you would do is basically, because I'll swing it, I'll aim for swing highs rather than intraday highs. But I would be taking profits at lower highs if I'm buying lower highs or lower highs. So if we bought here, we would basically just look at, we'd be looking at this lower high and then assess. So for example, we either take profit at the lower high or we think about, is there anything changing? And if nothing is changing, then we will not take profit. If things are changing, meaning we can now come in lower, then we would start to take profit. So there are two ways you can do it. For a month or a big sell-off and then bank took gold. And okay, yeah, I mean, it's a little bit of profit taking, but it's for the reason why gold sold off was because of what it means for rate cuts, which is quite interesting. I would never have thought about it that way, although it is true about how it works like that. At the time of when it all kicked off, I was slightly biased for longs because of what it means for risk sentiment. But the way the markets have traded it was based on how interest rates worked with it. So for example, we saw gold sell off So this would have been a take profit high and a take profit high because these are lower highs. But my thought process was, okay, if gold is all kicking off, or this situation is kicking off, gold should technically do pretty well. But the way the markets have worked it is oil prices have spiked, gas prices have moved higher as well. This then creates CPI to move higher. So therefore, if inflation is moving higher, the central bank wouldn't want to cut rates because cutting rates stimulates inflation. So by them not cutting, keeps it at a restricted level for longer. So it should bring inflation lower. And that's why, as a result, we saw yields push. So if we look at, for example, the 10-year or even the 2-year, since it represents policy better, we saw 2-year yields push higher. So it's more attractive for an investor to buy into treasuries in this time because you get offered higher yield. You know, this is an interest basically on the loan that they're offering, or the bond that they're buying, shall we say. And that's why gold had moved lower, because it's non-interest rate bearing. And that's basically how it worked. Even though that is true, I just wouldn't have thought about it when I would have wanted to trade gold. That's all I'm saying. What is your outlook for gold? For now, I'll leave it alone. I don't think there's too much bias now. If there would have been a lot of upside, it would have happened already. Yeah, unless we see a significant escalation, then sure. But yeah, if it happened, it would have already happened. China aggressive buying gold last year. Yeah, definitely. Is intervention chances high? Around 160 is the level that they are stressing. Let me check my laptop. Let me check my laptop quickly, and we'll have a little look. So, just having a little gauge on it. So it was about intervention. So I did have a article here on my Mac on that. If I can't find it, I'm sure it'll be on Bloomberg somewhere. But basically, if it wants to load for me, it should be on Bloomberg. Whereabouts are we? I think it was a couple of days ago. So this one here, and I'll show you in a minute. But on Bloomberg, there was a really good article about intervention. But basically, what we've noticed for intervention is as we approach that 160, that top that we're at now, or that sort of wick high and that lower high, we start to see more intervention talks. So basically, I think the yen could probably weaken off a bit more. But as we approach 160, we should not do too well. So you can see here, as we approach here, we become a bit stressed. And then as we approach here, 159, 160 is when intervention talks start to really ramp up and people become less inclined to buy, to sell the yen or buy dollar yen. What are your top pairs to... what do you think investors moving into risk off? I would say so. Why? Because if we look at the NAS or ES in general, ES has come in a bit lower. We pulled back a little bit now, which is perfectly fine. But we have come in lower. The dollar has come in higher. Gold, we kind of spoke about it earlier, about how we've seen a little bit of a shift away. But that's mainly because of rate cuts. And what it means for rate cuts. We've seen yields as well start to move a bit. So we're definitely a little bit of a risk-off environment. But I think it's very situational. What do I mean by that? Basically, every event that you see is different to the other one. So for example, the one in Russia and Ukraine, that is a bit of a different scenario than where we were at now. The one before that was COVID. That's a huge, massive difference between that situation and this situation that we're in now. So you as a trader, what you have to understand, or what you have to think and, sort of think outside the box slightly, is what commodities is going to be affected by the war, or what happens? How is the central banks going to be impacted? How is data going to be impacted? And then they take trades based on that assumption. So it's very situational the way you look at it, but I would say we're slightly risk off the way what currencies have moved in equities. But I wouldn't say we're like enormously risk off because we've seen the likes of like AUD strengthening massively, and New Zealand's done surprisingly well. The yen has weakened off, so it's not like we're full blown risk off, but we're very situational. What are your top pairs you're currently trading? AUD, so like AU longs, I do want to get in. We pull back now, which is perfectly fine. But AU longs would be, I think we looked at this last week. Was it last week that we looked at this one? It might have been. Yeah, last week I think we looked at the here and over here. So right now we're seeing a decent amount of price action starting to form. We didn't see no break structure here, so obviously we don't get in. It did gap massively lower anyway because of the open. And then we did come into here. But AU is a good long. AUD, New Zealand dollar is also another good one for me. Euro AD shorts is another really good one. If you want to trade tactically, Euro CAD shorts would make a lot of sense. If you want to trade more divergent trades, Euro GBP longs would make sense. But the only reason it's lower is because of oil prices. So once oil prices stabilize, Euro GBP longs would be starting to come up in terms of we now want to be buying. But why do we want to buy Euro GBP? You've got a decent economy in Europe at the moment. It's not amazing, but it's a lot better than the UK. Central bank is a lot more hawkish in Europe than it is, or the ECB is a lot more hawkish than the BOE. The UK's, what's it? The growth picture in the future, let me try and rephrase it as that, is not looking good. So therefore, we know rate cuts should come lower, a lot more aggressively lower in the future. So the pound should be a lot lower. That's why I'm looking at also GA shorts. I'm looking at GN shorts as well, but that's like right at the bottom of my pack. So Euro GBP would be a good one. That's the whole premise of fundamentals, isn't it? But those are the main ones that I would be focused on. Which currencies is the strongest and which is the weakest? Right now, obviously the environment we're in is different to the environment where we were this time last week. Because obviously this time last week, it was about, a potential peace talk this week, right? So people are trading that assumption, but it all kicks off over the weekend. So now you have to kind of remove that thought process out of the window for the time being. And then we focus on what is happening right now based on the war. So the trades that would make sense during this time would be dollar longs, AUD longs, yen shorts, oil longs, CAD longs, NOK longs. So like you'll trade Euro CAD lower, Euro NOK lower. You would trade stuff like I'm trying to think of other big exporters. I'd say mainly those ones actually. Yeah, Australia, so the AUD would do pretty well. Canada, NOK, the yen shorts will go weaker. Dollar longs, if you trade oil, obviously oil up. If you trade the NAS, probably lower in my opinion, because you have like AI issues, you have the war related issues. That's all in an environment where equities come lower. So I don't trade equities, but that's the fundamentals for them. Mainly those ones. Yeah, mainly those ones. As a Euro-dollar trader, can you help to narrow it down on what things I need to check fundamentally? Sure. So just tell me right now what you are looking at fundamentally. Like, what would you focus on? And then I'll just double check and see if we're along the right lines. But just let me know about what you would look at fundamentally for Europe. DXY, I'll cover again. Do you use supply and demand? Yes, I do. So I'll give you a very brief rundown of what I do. As I'm sure you know, I like to keep trades very, very simple. Why? Because there's just no point in trying to overcomplicate markets. Because what I had to realize was there are reasons why markets move, right? So why has oil pushed higher? It's not because it wants to take out people out of the market. It's about what we discussed about, supply chain issues, the Strait of Hormuz potentially getting blocked. So now, because there's less supply, there's more demand, or the demand will increase, right? So therefore, prices rise. So therefore, WTI rises. So what you have to realize, or for me, is there are reasons why trades move. So if I can figure out what trades are going to move based on what I know right now and what's potentially predictable in the future. For example, you could predict that the BOE is probably going to cut a decent amount this year because growth is going to come in lower. So we know we want to be selling the pound. So all you then do in that environment is you only look for supply zones if you are selling. So what I do is this. Let's keep it very, very simple. For those who have been following me for a good few years now knows I like to just keep things as simple as possible. But basically what I do is start in the higher time frame. So we always go in the higher time frame. So we go in a high time frame. So I will look at daily and weekly / weekly. And I'm not looking at that for bias, by the way, because the bias comes from fundamentals. That tells you whether or not you want to be long or short, right? The daily and the weekly stuff you look at is for demand zones. So if you see a daily demand zone or a daily supply zone, you mark it out. You draw a little box. Then what I do is drop to the... You can see my time frames here at the top left. Daily, 12, 8, 6, and 4. So what I'll do is do the exact same on the 12 hour. I'll do the exact same on the 8. I'll do the exact same on the 6 and the 4. And that's it. So basically, I'll be refining that supply zone or demand zone. I'll give you an example. So right now, I would look at like AUD. Let's say we're long AUD, right? Fundamentally, it does make sense, but I think the environment we're in now is a little bit choppy to buy into it. So therefore, I'm leaving it alone until we see de-escalation. When de-escalation comes, I do want to be long this because dollar will come in lower. So, for example, here, I would look at the daily and the weekly. So I'll ask myself, okay, if we remove Iran situation out right now, I know I want to be long. So do we have any daily or weekly demand zones here? Yes. So we have a daily demand zone there and I'll mark it out. Let's say we were here because last week we were looking at it around here, wasn't it? Or was it the week? What's the week today? The 4th. What was the week before that? 25th. I think it was around here that we looked at it. Anyway, what you do then is you have your daily demand zone. That doesn't mean you buy exactly from there because what you want to do is refine the entry a bit. So therefore you drop down to the 12. Is there a 12-hour demand zone in this daily? Yes, there is right here. So you just leave it alone because you want to incorporate the daily time frame as well. Then you look at the 8-hour. So we'll drop down to the 8-hour and have a little look. Is there an 8-hour demand zone here? Probably not. Not that I can see. So therefore we leave it alone. There's nothing else to do. Then we could drop down to the 6 and then lastly the 4. Is there any 4-hour demand zone in here? Probably not. Right? So therefore I'll leave it alone. In addition to that, what you'll think about is whole numbers. So something known as quarter number theory. Quarter number theory basically is markets moves generally on 25s, 50s, 75s and zeros. Does anybody know why that happens? For example, euro dollar 115, euro dollar 120, GU 130. Why does markets move on these whole numbers? Can anybody let me know why that is the case? But basically what you'll do is see if there's any major whole numbers around that demand zone, which as you can see at 0.70, right? 0.70. So there's the zeros at the end. So cool. That's a big area of reasoning. So it's around the region. That's perfectly okay. Then what I do is I wait for price action to push into that region. I don't do anything else until I see it push into that region. So therefore, let's wait. So cool. You pushed into there. Obviously gapped. Generally don't want to be trading gaps too often, especially as a higher time frame person. But then what you want to do is wait for it to push into your region of interest. And as you can see, we pushed into it. Let's say right now we are at here. I don't know. I'm looking at it in hindsight, but you would apply the same logic as you would all the time. So let's say we push into our region right now and we are approaching it. Cool, we do that and we see that reaction. Do we want to buy it? Yes or no, everybody? If we see that region. Psychological, correct. Tick size possibly for futures. But the main reasons are two things. Psychological, obviously. So that's why, like, if you see Bitcoin at 100K, that's more psychological. Like, there's no actual reason why that is. It's just very psychological. Bitcoin at 75K or like euro dollar at 130. There's nothing technically that tells us it can't go above that. It's just about psychological, psychology. Cool. So that makes sense. The other one is balance sheets, or when trades get booked at the end of the month. So you have rebalancing at the end of the month. Basically, what happens is audits, right? So banks get audited as long as they're not doing any dodgy, shady stuff. Audits. With audits, right, they check everything. So what happens is if they are buying at random generated numbers and areas, it's a bit more difficult to assess. But if you're buying at big, understandable numbers like 170 or 170, 250, and then you're exiting at 172 whole, like that's very easy to predict, to understand how much you would have made, how much you've risked it per trade. So it's psychological, and it's also about rebalancing. So yeah, we don't want to be buying at that. Why? Because there's no confirmation, right? There's no reason to buy it from a technical perspective, because we want to be working both hand in hand. The technicals gives us the entry, the fundamentals gives us the direction. So what we then do is we wait for a break of structure. So the break of structure is actually occurred now anyway. Why? Because this low created the lower low from here. Well, technically there because it did gap, but that's the lower low. That's the lower high. That's the lower low because we did close below this low and also I guess that low. Pulled back. Another low is created here. So the lower high is here. Where are we? Arrow. So the lower high is here. Do we want to buy it when we see this, everybody? Yes or no? Would you class this as a break of structure? Or a market structure shift, or whatever people want to rename it to nowadays? Would you class that as a break of structure? This wick here. Because people's asked me this before, right? Or even that. People's asked me that before, like, would you class that as a break of structure? Why is that not a break of structure? Well, structure is broken, right, when there's a closure. Because, well, if anything, the wick could have done this. That's not a break of structure then, is it? So just think about it like that. You want to see a closure because you want to see that there's confirmation that there's buying stress above there. You want to see that. So we don't want to buying, right? So we don't want to be looking for any demand zones on the 1 hour. So I leave it alone, right? It's all about patience in trading. So we leave it alone. Did we go up? Sure, that's fine. But we don't know that until we look at it in hindsight. So we want to be working with where there are probabilities. So the probabilities are that if we close above a higher, the likelihood it probably will continue, right? So now that we've closed above this higher here, that is technically a break of structure. So what we then do is we look for areas of demand. So let me just delete this and delete this just to clean it up a little bit. And we'll delete that as well and delete this. Cool. So now that we've broken structure, you can see that we work from the higher time frame to find an area or a region to then waiting for a break of structure out of our area. It's not about using technicals to find a bias because there's no predictable value in technicals, meaning why does this chart have to go higher? Like, why can't it go lower, sort of thing, right? So that's why you have to use data, you have to use what's happening in the world, you have to use fundamentals basically to give us a probability, shall we say, that it should go up based on X, Y, and Z, right? So we now only then look for demand zones because we want to be buying. So where can we see demand zones here? Well, number one, we have one here on the hourly. Lines up with prior highs and it lines up with 07500. So that would be an area that I'll be watching for sure. But ideally, if people use fibs nowadays, I don't know if people actually do, but it was quite a big thing back in the day. This would be down here as well. 50%, at least below 50% is essentially the best thing, right? Below 50%. Think about like a discount, shall we say. But there are two areas of demand there, and I'm not going to knock them out and say that both are wrong. So what I do then is wait for some sort of rejection, right? I want to see some sort of confirmation, like an hourly push out of that region, and then I'll look for longs. That's it. That's my strategy. Like, you don't want to overcomplicate charts. I've done everything. Trust me. I've gone through all of the charts. I've gone through all strategies, right? I've done Ikomoku Cloud. I've done ICT. I've done all of this other stuff that comes and goes. To me, if you just bring it all the way back down to basics, that's all you need. That's all you realize you need. We didn't take out the high that made the low, correct? So you don't use limit orders. No, I used to back in the day, just not anymore. Just not anymore. But yeah, essentially that's it. And then where would I put my stop? For example, if I don't know, bought here, stop will be below the high time frame low. So I don't know, that would be about 85 pips, give or take. But my target, because I'm swinging it, remember, would be a high time frame high. So I'll look on the left and think, okay, target one, we've already kind of tapped into there, so it will be the one after that. Does it still make sense fundamentally? Yes. So that's a 1 to 3 on just one trade alone. And that's not like you're going to only hold one trade. It's about, that's the swing trade, and then you can always get into other interim trades in the meantime. For example, this is like the big high time frame leg, but you're going to see pullbacks and pushes in between that. So you're going to see that, and then you're going to see pullbacks. Nobody's saying you can't get in on that pullback, right? Maybe get a bit of risk to reward if there's a good area or region. Target-wise, completely up to you. I'd probably aim for the same high or slightly below that. And then as the trade is going, you're basically just asking yourself, does it still make sense? That's all you're asking. Does it still make sense? Meaning, are the reasons I'm long in the first place still there? Do I still want to go long? If it's a yes, I still hold the trade. That's why sometimes I swing trades for months and months and months, because there's no reason for me to exit. If there's a reason, I'll exit. If there's no reason, I don't exit. Will there be a giveaway? Yes. What's your average RR? Anything above 1 to 2 is fine. I don't have an average because I've not looked at it in over 2 years at this point, but anything over 1 to 2 is I'm perfectly fine. Will there be a yes? There will be a giveaway. This is why I'm waiting. Yes. So I think fundamentally it makes sense. It's just that right now, because the scenario we're in with Iran, I think it's a bit risky to get in. Therefore, I'm leaving it alone until I see a reason to get in. Is this an active trade? No, because of the situation we're in with Iran. Because I want to be in trades, right, where I don't want to constantly monitor the chart. I don't want to be like, oh, I need to think about this. Oh, this thing's happening. Oh, this thing's happening. Oh, this thing's happening. I don't want to be in those trades where I'm constantly monitoring. I want to be in trades where it makes sense on a 1 to 3 month horizon. And if it changes, I'll change my bias. If not, I still hold the long. I'll still get into more additional longs, as long as obviously risk sentiment, or not risk sentiment, risk management allows me to do that. As long as you're not over leveraging, taking too much trades, because I don't want to say if we come crashing down, but margin is a thing nowadays, isn't it? I do sometimes hedge, yes. And there are 2 reasons why I hedge. My students would know this in particular, but basically the reasons I hedge are only because of 2 reasons. Number 1, fundamentals. So also known as tactical trades. So right now, dollar longs is tactical because for me, I don't think the dollar should be this high anymore this year. So I know we want to be selling the dollar this year. So any moves higher in the DXY is going to have to be for a reason, right? So the war is that perfect reason. It's tactical, right? So you have to be very nimble. You don't really want to be long the CAD, but you would want to be selling EuroCAD in this environment. So therefore, EuroCAD is a tactical trade, isn't it? So it's about that. The other one I don't do very often, but it would be positioning. I haven't really taken a trade on positioning for very long, but that's the other one I look for. So basically, if people are too long a currency and the fundamentals are still okay, but we're not having too much wow factor, you do tend to see pullbacks, even though the fundamentals are still decent. Why? Because of positioning. So like CFTC data, COT data, that's the other trades. I don't do that very often though. The most common one for me is tactical. So like dollar longs or EuroCAD shorts are tactical plays right now. Because I don't want to be short the euro, but I do want to be short it in this environment. Hopefully that makes sense. So that's the only reason I would hedge. How many pairs to start with if I only trade 1 hour based on the weekly? What do you mean by that? Do you trade indices? No. Fib 0.5% retracement. Okay, yeah, that's fine. I mean, look, there is no right or wrong answer in trading, right? There is no right or wrong answer in trading. Meaning, every strategy will work in different market environments, right? Meaning, if you trade, I don't know, supply and demand, in certain market conditions, that is going to perfectly be fine. But if you trade Wyckoff, you might not be getting into too many trades because your main trades for Wyckoff is going to be when you see consolidation. But you don't want to be buying supply and demand in consolidation, right? Because you want to wait for those breaker structures. You want to wait for those closures. So different trades will work in different market environments. So for you as a trader, you have to figure out, okay, based on my data that I've accumulated, that's why you can use TradeZeller, for example. Does it make sense to say, okay, out of the 500 trades or 1,000 trades that I've assessed, by the way, you shouldn't be doing like 10, 20 trades. You should be doing as many as you physically can do. Does it make sense that 0.5 or 0.703 in your example? Does that make sense? If it's a yes, perfect. If it's a no, try and figure out as a trader. And that's why it comes down to a bit of experience as well. Because in experience, you obviously have more time in the market, so you've seen more adjustments happening. But yeah, that's what you do with whatever trade bias you want to do. There is no right or wrong answer, everybody. It's so simple. Yes. I tried to make. I've done every single strategy. I don't know if I can show you actually. Let me show you on here. Let me show you how cringy my technicals used to be back in the day. So please don't judge me. How do I do it? This one. 2019. I'm actually being kind of sick right now, just looking at this. But this is how my technicals used to look back in 2019. Do I have one from 2018? Yeah, December 2018. Ugh, that looked ugly. But basically, I've gone through every type of strategy before, right? I've done everything. To me, that's what I was doing at the start, and it made sense, and I thought I was the dog's bollocks back then. But you soon realize, and you do seem to get humble quite quickly in the markets, that you actually don't know everything. But what happens is, and I'm sure you can agree, is your strategy that you did a year ago is kind of different to possibly that you've done now, or when you first started. If you've been trained at least over 2 years, I'd say, it's a lot different to when you started. I've been trading since 2018, so a decent amount of time. But yeah, that's my strategy back then. It's obviously completely different to this one, and you can see how simple that is. Like, I don't try and overcomplicate charts, right? But for now, that's what I thought I had to do, but you actually didn't have to do that. Cool. I appreciate that. Wish I can win 12-month TradeZeller. Possibly. I mean, there's a 6-month TradeZeller on the what is it? Giveaway today. Possibly you might win that. Who knows? I have a problem that I go out of the trade early, or sometimes be a bit early. How do I suggest? I think the main one for that, right? If you're too early, there are a couple of things that, is kind of textbook that everybody says is kind of cringe at this point, but I guess it's kind of true. It's like either mindset or you're not looking at in terms of where you are in the trend. So that's, for me, when I'm early, it's generally because I'm not thinking about the trend, because my mindset is okay, right? It's human, I suppose. But the one that I've noticed the most when I'm early to the trade and I've taken a loss is because I haven't thought about where I am in terms of the trend. So what do I mean by that? There are 3 types of trends that everybody knows. There are tertiary, intermediary, and lower time frame, I guess. I haven't taught this stuff in many, many years now. But basically, what you'll notice is on the daily and the weekly, there are trends. Like in here, for example, is a trend. Not the greatest, but you can see that we're making high highs and high lows. Higher highs and high lows. So this is the weekly trend. Daily and the weekly trend, right? Here as well is a perfect example of it. How this is the weekly downtrend. But on the lower time frame, relative to the weekly, obviously, you do have trends within those trends. So for example, this is on the 8 hour or even the daily, right? If we just look at the daily, daily is also pretty okay to look at. You'll notice that this is July all the way till middle of August. There was a lower time frame or a daily pullback. But within that, you have a 4-hour trend. So this is what I mean by understanding what type of trend you're in. And you can see how here we have that lower time frame trend, right? So you have that high to that high. If you trade the 4-hour, that's what you'll be doing. But we can go even lower than that, obviously. Within that, what do we have? As I'm sure you can guess. It's going to let me go back. It was around here, wasn't it? Within that, we have what? 1-hour trends. Within that, we have 15-minute trends. So basically, for me, what I notice is I'm neglecting whereabouts in the trend we are. So for example, if I want to be long AUD USD, right? But I'm trying to, and let's say fundamentally it makes sense. Obviously, in hindsight, looking at back in replay, it obviously went a lot lower. But let's say so, for example, we were trying to buy it. What I was thinking would be where we are in terms of the trend. So you would think about, if I just fast forward a little bit, I just want to see where we're at. Let me go slightly higher so we can skip a bit quicker. Okay, cool. Very ugly price action, if I must admit myself. Let me pause it here. Cool. So for example, if I want to go long here, do I want to be, if I can go back slightly, say here, do I want to be long where we're at right now in terms of where we're at for the trend? Meaning, are we buying quite high is the question. I would say so, yes. Why? Because we haven't really had a decent pullback. So what you would do is wait for at least, and that's why you can use fibs to your advantage, for at least a bit of a pullback. So here would be relatively quite high because of the trend, right? You can see the trend, so that's a little bit high. I'm swinging it, so I'm just trying to think about where we're at for swing trading. I would rather wait for a bit of a better pullback to then capture that higher, right? If you're selling on the downtrend, you'd think, okay, where we're at on this trend on the left here, is there a reason to sell it here? You get my gist, right? So you just have to think about where you're at in terms of the trend. And that, to me, is when I took the most losses, because I neglected where we were in terms of the higher time frame. Hopefully that makes a bit of sense. I am a slab line trader, correct? Do you trend lines make sense in the market? If you've got the data on it, who am I to say no? That's the best one to say. Do you have a channel? Depends what channel. But yeah, I mean, I guess you can look at, sometimes they work, sometimes they don't. Same way with every trade strategy. Sometimes they work, sometimes they won't. But that's why you have to use risk management to your advantage. So never obviously over leverage, because you are going to go through probably losing streaks. So you don't want to get absolutely pummeled into the ground by being through that losing streak. And that's why risk management is important. Should I pick something specific for fundamentals only? So you look at the broad fundamentals. I have made some videos on that on my YouTube. How do you manage timing? The timing would be, are we starting to see some changing fundamentals? So for example, if you are, like right now, I'll give you a live example of what you could look at for timing. You want to be long the dollar because of Iran, right? That makes sense. We have high oil prices, more pushback, potential pushback, shall we say, from the Fed for rate cuts, right? So obviously rate cuts are bearish for a currency generally. But if we now start to see going from a period of pushback on cuts because of Iran to then de-escalation, markets reassessing the Fed and thinking, actually, you could probably can go back to where you were previously, that would be the timing to get in. And what would cause that timing? De-escalation. So always think about like a timeline of, if this happens, what could happen because of that? And if that happens, what would the outcome be? So think of it like a timeline. And that's generally how you use timing. 1 hour breaker structure, yes. 4 hour, I don't look for that stuff. So if you're entering 1 hour, is it pullback or liquidity sweep? Possibly. I don't really backtest that. You're still in your swing trades. Yes. High on my personal, yes. I did take a 1% loss on gold on my phase 2. I haven't entered anything since Monday when I took that loss. But yeah, I'm cushy right now. I don't need to rush him. I'm not trying to pass accounts super quickly. Obviously, I don't want to stretch it out for months, but I don't want to like over leverage and try and just pass the account. To me, I want to be trading how I would be doing it on a live market. How do you get through the phase of when you had seen everything about the strategy that was clear to you, but trade somehow kept ending up in the opposite direction? We've all gone through that period, especially for me. I have gone through that period of like, it makes sense. Like, you know, the strategy, everything's gone like you know as much as you can, but you are in the opposite end of the spectrum or the opposite end of the spectrum in terms of you want to be long, but markets are just tanking and going low all through your demand zones that you want to be buying from. The reason that happens, and the only one reason, is because of fundamentals, right? So meaning, if the fundamentals that I was looking at were suggesting longs, I obviously want to go long. But maybe there was something I neglected. My losses going through, or like my trades going through multiple demand zones, I start to reassess and think, what is there that I missed out? Because I'm a human, I'm obviously, there are things I am going to miss out on. So I'll go back and just look at it back from the beginning again and think, okay, what is there things that I missed? Is there any news that came out that I neglected? And I'll just go back straight to, it's not going to take me forever to do, probably 10, 15 minutes at the most, if that. And just go back to the beginning and try and see what I missed out on. And if I'm wrong and think, okay, if I'm wrong, look, it is what it is. Let me just wait for those pullback to get into a supply zone. That's it. That's the only thing that I noticed when you start to take like losses after losses after losses, or it's just going all the way through your zones and taking losses. That's, to me, the thing that I have noticed the most. 9 times out of 10 it's been that. Accounts I've got is 100Ks and 50s. What do you stop over consuming? That's a good question. For what in particular? You talk about fundamentals or just in general? But yeah, let's have a little look at, there's actually a really good doc, by the way. If I quickly show us, if it's gonna let me. Where's OBS? Perfect. There's this really good doc from Jordan Rochester, and I chucked it into the Discord, in my section of the Discord. If it's going to let me zoom out a little bit. Perfect. Now, I actually learned from him back when I first started fundamentals, and he indirectly taught me a lot. But basically, what he said here is a really, really good one. Markets can be illogical longer than we can remain solvent. That right now is very, very true. Basically, illogical, meaning it doesn't really make sense for the trades to go that direction, but it can remain in that direction that doesn't make sense fundamentally as long as you are in the trade, for as long and even longer than you are in that trade physically. So that's actually a really, really good one. And curves flatten out as cuts get priced out. So the flattening out that they're talking about is what's known as bear flattening. Or I'm just trying to think of the yield curve. Bear flattening, yeah. So it's known as bear flattening. So in that environment, you're seeing short end rates climb quicker, or yields climb quicker on the short end, a lot quicker than the long end. So rate cuts are getting pushed back. So that's what's known as curve flattening. And that's good for a currency, by the way, if that does happen. So that's kind of what we're seeing on the dollar. But that's a bit more advanced, but that's more like slightly higher time frame. How do you, so just answer that question. Instant account on eval. I'm on eval, not instant, but for those who are a bit more on the like prop firmy space, please let him know, or she, about whether or not you should do instant or eval. For me, how I would sort of interpret it would be, if you're already pretty competent in trading already, and you have that statistics to back it up, i.e. multiple months of back testing and data, then probably instant. But if not, go for eval. I'm only doing eval just to test out the prop firm, and if they're SHIT, I am going to tell people it's SHIT. How do you not blow your accounts with futures? I don't trade futures, sorry. I'm not too sure. I can't answer that question. Now, in terms of giveaways, and then after we shall end the stream. So with giveaways, as you all know, you have to type !join. Please type that in. Don't type anything else other than !join. Otherwise, the bot won't capture you to enter. Do !join. That would enter you into the giveaway. Exactly how that is. If you enter anything different, you are not going to be entered. Why is everyone tagging #Mark? But yeah, basically, that's what I'm looking at for markets. I mean, remember this stuff, right? It's very complicated, right? You are trading against people. They're not trying to trade you out, but you are trading against people who have gone to university, right? I'm talking about at the institutions, have gone to university, have studied economics. They've gone to LSE, which is the London School of Economics. They've gone to other big, financy universities out there. They've gone for multiple years. They might have had a master's, right? They might have studied maths. So I'm not really good at maths, by the way, but they've gone and done this, right? But there's a difference between like that sort of stuff. Entries. Can we hold off the entries for a bit longer, Mr. Anthony? Let's wait another minute and we'll get those names in. But where was I? Where's my train of thought? Yeah, you're trading against these universities, right? Or not university. You're trading against people who went to universities to study all of this maths and economics and finance, whatever. There's a difference between doing that and trading, right? There's a difference between economics in quotations to fundamentals. There's a massive difference. So what you want to be learning is more so fundamentals. Like you have to know the terms, right? That's fine. You have to know the terms of what is GDP, what is inflation, what's interest rates. But how you trade it is going to be completely different to how like an economist might look at it. So you have to figure out, or like you have to learn. That's what I had to learn. Like nobody taught it. I had to learn it by myself, right? So I'm trying to teach you what is actually important in markets rather than just doing that. Cool. That's all the entries I'd say, Anthony, if you agree. As long as you haven't double entered, by the way, because the bot will catch you out. Now, let me get up a random name generator. Wait for those names to come in. And then we'll put it in here. So I think these are from the old people, so we'll delete that. So we're getting the names now. But yeah, that's basically how it is. That's just the nature of the markets at the end of the day. Economics grind, correct. Yes, it is a bit of a grind. It's like anything really. It's not going to be easy, but the more you do it, the easier it does become. Where do you backtest? On the chart. So if I'm backtesting fundamentals, I'll choose a random year. For example, let me pluck one out the air, 2012, 2013, whatever. Then go out onto the web, try and figure out and see what happened during that period for a fundamental perspective. Then make an assumption based on that. And then think about how the charts could have traded based on your assumption of what you've researched. Ducky race. Okay, let me have a look. Name Ducky race. Names. Yeah. Okay, I'll do it. So we got all the names now, so let me just copy them all. Perfect. Thank you, Mr. Anthony. Up to 100 names. Okay, I think there's more than 100. Is there another one? GitHub? I'm gonna have to, hopefully don't have to download it. Okay, so I think this one seems fine. Names. All V. Okay, so there's all the names. Cool. Yeah, perfect. So here's the. I guess I've never done it before, so I don't really know how this is going to work out. But this one is for a. Where is it? An Apex account. So basically, as you know, the way it works is as long as you put yourself in the YouTube chat and say, actually, I'm here, then you open a ticket in the Discord within 24 hours. So let's have a little look then and see. What do I do here? I'm assuming I'll do like a 15-second. Okay, I'm assuming this is what it means. So we'll do a 15-second race. Actually, if we're doing Usain Bolt, how many have you double entered? Whatever the list is. So the bot would have called it out. But 15 seconds, 30 seconds. How many people doing? Only 31. Yeah, a bit weird. I'm not too sure. Uh, 30 seconds. Okay, we'll do that. We'll do 30 seconds. No stress. Let me go back. Didn't even let me clear it. That's annoying. Yeah, I'll do 30 seconds of that. Let me get the names back up. There we go. Done. 30 seconds. Set. And start. But yeah, whilst that's racing, in the meantime, let me just get back the chat up. Possibly. I mean, I don't really know exactly how. Like, if there's 150, it should have, like, generally, yes, it would have caught. Unless they've left, I don't know. If they're not here, then we'll definitely know because their name would not be here, or they wouldn't say that. Would you say Binance is good for beginners? Possibly. I'll discuss that. Oh, okay. Teddy, XT5J, if you're here, drop it in the chat. If not, we'll give you 15 seconds or so because I don't think there's a stream delay. And if not, we'll have to restart it again. Five, 4, 3, 2, and 5 3/4, 1. Is he here? Okay, cool. So it doesn't look like he's here. So nonetheless, let's restart that again. Let's race again. If the name does come up again, I'll just remove the name, but let me start the name again. So these are the names I just collected. So Madurvul, let me just make sure this in here. Yeah, so that's the correct list. 6, 5, 4, 3, 2, and oof, that was close. Abel, if you're here, 9 Yankee, Niner Oscar, Niner Golf. If you're here, please drop it in. I'll give you 15 seconds as well. See, people leave, right? Here's what it is. Abel, 9 Yankee, 9 Oscar, Yankee, oh, Golf. Is that a 9? Yeah, 9 Golf. Doesn't seem like you're here. Oh, you are here. Perfect. All right, sweet. So that's it. Let's remove you. That's for an Apex. So basically just go into the Discord and create a ticket, and then that should be fine. Different name. Maybe I can't really say if he has been using a multiple account or not, but we'll see in the Discord. The mods are generally pretty quick at figuring that out. So that's for an Apex. Next one is a Alpha Capital. So let's just restart that again. And this is for an Alpha Capital. Able, oh, maybe. I don't know if he is using. We'll figure it out. This one's for a Alpha Capital. Okay, well, I'm sure one of the mods will sort that out if he has been using a different account. This one is for Habib. So if you're here, Tango 6 Whiskey 7 Charlie. If you're not here, let's see. I'll give you 10-15 more seconds, give or take. Ten, 9, 8, 7, 6, 5, 4, 3, 2, and 1. Okay, actually, that was bang on time, to be fair. Cool, you're here. Amazing. I'll talk about being exactly on time. Remove you from the list. Remove winner from the list. Tick. Race again. So this one is for a 6th month trade Zelena. And let's just restart that. Dark Race is better than Spin. Yeah, I mean, it seems a bit more better in my opinion. Should do like a COD competition with the names or something. I think that'll be a bit more competitive, like a Rainbow Six Siege 1v1 in Oregon. So this one's for 6th month trade Zeller. Hamza Abba 4919 if you're here. Hamza, if you're here, I'll give you 10-15 more seconds, give or take. Mm, 10, 9, 8, 7, 6, 5, 4, 3, 2, 1. Cool. Right, we have to race again. All right, again, this is for 6-month trade Zeller. So 23 more seconds. Yeah, some of these ducks are proper slow with their hell. This one's catching up, this one as well. Look at this one. Damn. Talk about getting that sugar in at the end. Technotora techies, if you're here. Again, I'll give you 10-15 seconds because I don't think there is any stream delay at the moment. 10-15 seconds, and then we'll have to race again, I guess. Ten, 9, 8, 7, 6, 5, 4, 3, 2. Okay, perfect. You're here. Talk about timing as well. Everyone seems to be bang on time today. So apart from that, everybody, yeah, I think that's myself today. I appreciate you for being here. Again, we might be doing Discord next week, so I'll let you know if there's any changes to that, but we'll stream on Discord around the same time, give or take, for next week. But apart from that, everybody, I will see you all then and have a good rest of your weekend. Or week and also weekend. And I'll, of course, see you all next week. Have a good rest of your week, everybody. Take care.